Hello viewers, in this video I'll be going over WTI crude oil, ETF ticker symbol USO. Today we are up 2.9% on the 1 hour chart. We are on overbought RSI. The 1 hour MACD is positive on the 4 hour chart. We are nearing overbought RSI, not quite yet, eventually very soon. And the MACD has been positive since Friday of last week. We breached out of 200 moving average resistance, which is a positive sign for the bulls. On the daily chart, we saw a convergence that dated back to October 17th, and that continued to push the price of crude oil much higher, and we approach close to positive MACD. I believe we may do so eventually very soon. So right now I do see a possible resistance at the 200-day moving average, which is this green line, and around the price of $11.90. So that is our first resistance. And as for support, I do see a possible support around the price of $10.80. That support also dates back to past support back in early August, so that is the next support if we do reverse and head down lower. So if we were to move on higher, that price movement is roughly around 1.9% to the upside. On the downside, it is roughly 7.3% down. So let's head to the forecast model. So this forecast model is now available for free, so check out the link below. And back to the forecast. So I'll go day by day where WTI crude oil will head to the next coming days. So we have 1 day out, 2 days out, 3 days out, 4 days out, 5 days out, 6 days out, and 7 days out. So which one of these models we should focus on? Ideally the model that is the best match to the current trend. We have the current trend right here, and below is a trend that I believe is the best match. This trend dates back to November 18, 2009 to February 17, 2010. So let me point out why these two charts are similar. So what we have in the beginning of the trend, we average below the middle Bollinger Band, and then we proceeded to make a nice reversal to touch the upper Bollinger Band. After touching the upper Bollinger Band, we proceeded to touch back down to the bottom Bollinger Band once more, and then we see it breach out and close above the middle Bollinger Band. So we see a reversion to the mean. So we have those points, and right down here we start to see a similar pattern shaping. In the beginning we averaged below the middle Bollinger Band. We made a nice reversal to touch the upper Bollinger Band right there. Next we see it touch back down to the bottom Bollinger Band, and after that we see a reversion to the mean above the middle Bollinger Band as indicated or as seen in the current chart. So let's make this blue. So what we have is 1, 2, 3, 4 points. We also have 1, 2, 3, 4 points. So there's reason to believe that the trends and patterns are the same. The outcome and forecast should be fairly the same. So back to the forecast model. Back then, WTI crude oil in November 18, 2009 to February 17, 2010, WTI crude oil was up around 2.1%. So I do see WTI crude oil heading up higher in next coming days. So, and this forecast model is free to use. Check the link below. And that is all. If you enjoyed this content, feel free to like, comment, subscribe, and thank you for watching.